Hello, my name is Ayden Domico, and I am a current junior in Marquette University's Applied Investment Management program covering domestic finance. And today, I will be pitching Seacoast Banking Corporation of Florida, or NASDAQ ticker SBCF. Seacoast Banking Corporation of Florida is the holding company for Seacoast National Bank, which provides financial services to customers in Florida. The bank earns revenues from two segments: interest income, which represents 79.8% of fiscal year 2021's revenues, as well as from other fees representing the other 13.3%, which includes wealth management fees, interchanges, and mortgage banking fees among other banking services. Interest income is generated from loan-related interest and fees, while the other revenue is generated from financial services provided such as account servicing, investment advice and brokering, debit card interchange services, and mortgage servicing. Seacoast National Bank was founded in 1926 by Dennis S. Hudson Sr. in Okeechobee, Florida, as Citizens Bank, and the firm is now headquartered in Stuart, Florida. While being the community bank of Stuart, Florida for nearly 100 years, Seacoast National Bank now has grown to become the largest and only publicly traded bank headquartered on the Treasure Coast. It is now one of the state's largest regional banks, operating 54 branch locations throughout Florida. The bank has steadily grown over time, strategically establishing itself within major metropolitan areas such as Orlando, where Seacoast has the largest market share of any Florida-based bank. They also operate in Jacksonville, Tampa Bay, Naples, Port St. Lucie, and Miami-Dade County. Since going public in 2004, Seacoast has become more aggressive at implementing their growth strategy. The company has made a number of acquisitions over the past decade, with a majority of the acquired firms being community and regional Florida-based banks, further establishing Seacoast's footprint throughout the state. The company prides itself on its innovation, strong level of customer service, community involvement, and strong financial performance in good and bad times. For example, Seacoast assets under management grew at a CAGR of 19.59% over the past 5 years. With a strong loan-to-deposit ratio relative to similar banks, Seacoast National is primed to generate further interest revenue in the event of future hikes in interest rates, which seem imminent. Florida is the third largest state in terms of population, and it continues to grow rapidly following the COVID-19 pandemic. This tailwind is leading to an increase in the size of Seacoast's potential customer base every single day. Given Seacoast's strong balance sheet position and the potential for future interest rate hikes, the company's ongoing strategy of inorganic growth through acquiring other Florida banks appears sound, especially with management's notable track record in integrating new acquisitions. Additionally, given the current and future population growth projections for Florida, it is recommended to add Seacoast to the AIMS Small Cap Fund with a price target of $44.73, representing 34.96% upside. Hike? With a fiscal year 2021 loan-to-deposit ratio of 72.4% and rising, Seacoast Bank is well positioned to enter a period of rising interest rates. On April 21st, earlier this year, Federal Reserve Chairman Jerome Powell stated that a 50 basis point rate hike would be on the table in the next month, and he also reiterated that more increases are on the horizon. A net interest income sensitivity analysis was performed by Seacoast management in light of the Fed's potential rate hikes, which can be found below, and the bank is in position to earn an additional 6.7% net interest income in the next 12 months and 10.1% in the long term if rates rise 100 basis points. Additionally, if rates are hiked another 100 basis points on top of that, the company would experience 13.4% net interest income growth in the short term and 19.6% in the long run. With an anticipated interest rate increase of 100 basis points over the next 12 months and more to follow, Seacoast's net interest income is expected to grow at a CAGR of 10.9% over the next 5 years. Growing like a weed. Since the beginning of fiscal year 2014, Seacoast has made 13 acquisitions, all of which have been Florida-based banks. These deals have largely expanded Seacoast's footprint, as the company now has branches within each of the major metropolitan areas as well as throughout the entirety of Florida. Over $3.4 billion in loans and over $4.3 billion in deposits have been inherited through these acquisitions, illustrating Seacoast's strategy of inorganic growth within state borders. New markets include Boca Raton, Palm Beach, Sarasota, Tampa Bay, and Melbourne, and Seacoast management has indicated the acquisitions will continue. Over the past decade, over 2.7 million people have moved to Florida, resulting in resident growth of over 14.6%, which is double the U.S. growth rate during that time. The state is poised to continue to grow, albeit at lower rates than during COVID, and Seacoast will undoubtedly grow with it. Through recent deals and future acquisitions, Seacoast's loan portfolio is expected to grow at a CAGR of 9.36% over the next 5 years. Additionally, future growth in the population of Florida is expected to grow Seacoast National's entire balance sheet and all revenues by a CAGR of at least 2.87% over the next 10 years, supplementing the bank's customer acquisition and inorganic growth strategies. Oh Captain, my Captain. Navigating through many acquisitions requires strong leadership, and Seacoast management team is more than qualified to help the bank continue to grow at a stable level. American Banker recognized Seacoast as one of America's best banks to work for, while Forbes called Seacoast one of America's best in-state banks. Additionally, financial technology leader FIS recognized Seacoast as an Impact Award winner for bank technology. These awards demonstrate that Seacoast leadership are not only able to make acquisitions in line with the bank's growth strategies, but also able to integrate new branches, employees, and customers seamlessly into the bank's existing culture and operations without growing pains. To reach an intrinsic value for Seacoast Banking Corporation of Florida, a 5-year excess equity model was utilized. After applying a terminal growth rate of 1.5% and a cost of equity of 8.03%, an intrinsic value of $45.78 was reached. A sensitivity analysis of the terminal growth rate and cost of equity, which can be found below, of plus or minus 100 basis points, ranged from $39.26 to $55.20. Additionally, a price-to-earnings relative valuation was calculated, resulting in an intrinsic value of $38.08. Finally, a price-to-book value relative valuation was calculated, resulting in an intrinsic value of $46.73. By weighing these three models 70, 15, 15 respectively, a price target of $44.77 was reached, representing 34.96% upside. Seacoast Banking Corporation of Florida currently pays a 1.5% dividend. Credit risk. If another event, such as the COVID-19 pandemic or a major hurricane, hampers the economy in Florida, Seacoast may not be able to collect the loan interest it depends on from its customers with struggling businesses. Non-rising rates. If the Federal Reserve changes course and decides not to raise rates over the next few years, Seacoast National will not experience the increase in income derived from loan interest. PPP fraud. Although Seacoast National sees the originations of new PPP loans following the end of fiscal year 2021, existing fraudulent claims and law enforcement investigations into said claims could bring negative publicity to the bank, decreasing stakeholder confidence in Seacoast. The management team. Charles M. Schaefer serves as chairman of the board, president, and chief executive officer of Seacoast Banking Corporation of Florida, and he has been with the firm his entire professional career, which spans nearly 25 years. Chief Financial Officer and Executive Vice President Tracy Dexter was previously a senior manager at PricewaterhouseCoopers LLP, where she spent 12 years. In February, Seacoast named James Stallings as Chief Credit Officer, coming over with 25 years of credit experience at another local bank. 9 out of 11 board members are independent, and 3 are female.